A wonderful evening to everybody. Nice to see so many faces this time around. The market has actually been consolidating in the last 3 months, so if I had used that to be able to determine how many of you would come today, I guessed wrongly. And it seems that much of the waiting that we've had since September, October was very, very rough because the index actually traded in a very big range. But just recently, we've had a little bit of a push out of that particular range, and things are starting to be able to look a little bit more interesting. And let's have a look at how the state of the world is, and of course, how the state of the Philippines is, so that we can better track our direction on how we're going to be able to pull the cord, so to speak, to be able to buy some of these issues. And as a general overview, as you've seen, that global markets are expected to be a little bit volatile, at least looking into the next 3 or 4 months. And we've seen very, very wide disbursements between some countries, particularly strong ones in the US, some weakness in Europe, very mixed situations in Asia, and then we'll look at some of their graphs later to be able to have a look at these. But the Philippines seems to be quite outstanding in its efforts to continue moving higher. We've not had any particular heavy sell downs in terms of the index. That might be a bit too scary. And since we are now attempting to push off major resistance, I think things should be a bit more fluid in the advance. But unfortunately, the volatility will continue because it still has to deal with the external situation of other markets also being quite volatile. It is also very helpful that oil prices continue to trend downwards, and I think April showed you a slide earlier where she showed that the Philippines is one of the biggest beneficiaries into the lowering of oil price, and how that, of course, attempts to be able to add more value into the consumer side. And what we're going to be doing right now is we're going to be looking to buy on support. We cannot be too aggressive as of yet. But we will have to observe the market just in case things do become a bit more aggressive. But for the meantime, I think we should be moving into the market with some degree of restraint. And you can still buy values when prices attempt to make reactions. And I feel you will get these opportunities again. So we'll start off by looking at the global market. And let's have a look first at how the Philippines has managed to be able to pair with the rest. If you notice the graph on the left side, I've drawn the performance of the Philippine index, which is in green, compared to your S&P 500 in blue, the Morgan Stanley Emerging Market Index in black, and the MS World Index in red. The MS World Index is comprised of mostly developed markets in the West. And you can clearly see that the Philippines has been quite an outstanding player in terms of that, and then continues to remain quite solid. The next chart there that you have on the right side shows the performance in the last year, seen from the point of view of last January 16. So if you look at from January 16 backwards 1 year, you can see that the performance there has really been quite good. We're the third performer next to China and Japan. Now, we'll start by looking at one of the biggest markets in the world, which is the United States. And a lot of people have been clobbering me with questions, asking me whether the US market is getting ready to top out or not, and come out and make another very big correction. Well, it's possible that a correction may be in hand, but as you clearly can see from that image, that the trend for the US is still very much upward. Yes, we do have to price in a particular short-term reaction may actually unfold because the index had come from the high end of its particular channel. And it's very normal and usual for it to be able to back off and try to be able to get back towards support. I'm looking at support for the S&P 500 between 1950 to about 1915. I do not expect any major breaks to come about that particular index unless, of course, something very massive comes out to be able to disrupt things. So as things stand, I think we're looking for an opportunity to buy that index as well. I also feel that in the US market, what is causing some of the problems we've had in there is also very much external, not too much internal. And part of the things that we've also noticed recently is that bond prices have actually started to climb up. And for about the period of about 2 years ago, the relationship between the bond market and the US equity market was actually falling out of the usual. And that was because the US attempted to go into a major bond buying program as the QE efforts attempted to be able to keep bonds quite hoisted upwards. But we've known that bond buying has ended, QE in the United States has ended as well, and it's because of that that things are starting to be able to normalize. And now we're seeing that bond prices, the graph there on top, is starting to inch up a little bit, and that's causing some pressure into the equities market. But it doesn't look like that up move into the bond market is too drastic as of yet, and so that means that perhaps the pullbacks into the particular S&P might be quite limited and maybe drawn up to the trend lines that I've drawn there on to the right side. Now, one of the reasons why I feel that the US market might be subject to volatility comes from what we call a volatility index. This index tries to be able to get the sense of how wild is the up and down movements of an index. And just to give you an idea, the more volatile an index becomes, the more edgy the investors are. And so whenever you see this particular index attempt to try to work itself upwards, that means that your market is getting a bit more jittery and edgy. And it's because of that that usually market reactions are usually taken forth. And I've noticed recently that if you could see from the movement we've been getting in this area, we've seen it coming out of the regular downward band in terms of volatility. And so that puts a little bit of apprehension into the pie. And it's because of that it's quite possible that we could get a little bit of a reaction more into the S&P. But I hope that it manages to be able to stay above this particular trend line, because if it breaks below this trend line, then the tendency for it is to be able to pull back quite wider. And this is what we call a corrective reset. And when we say about a reset, that means that the index may have to be able to make a wider corrective motion, which last time it happened did something like a 16 or 17% pullback into the S&P 500. And so that's why we'll be very watchful of this. I mean, we don't actually have an official trigger into that particular direction. It could still not do it. So I don't want to be able to preempt it, but I do just want to be ready just in case, because we are still looking for an opportunity to buy the markets, and who knows, that might be another opportunity knocking on our door. Looking into Europe, we feel that the motions in Europe are a little bit more tender, and I think this is the reason why the ECB is still trying to be able to contemplate putting out a potential QE program tomorrow. And they do have something quite lined up. There is talk that there would be something introduced between the realm of about 500 billion to about maybe even 650 billion euros as a bond buying program to help out. And because of that particular prospect, you can see that the markets in Germany, in France, and as well as in London, that you see the markets have actually quite improved. Of course, there's still pressure in Greece, and that's the graph here on the lower left side. And although I don't think that Greece will probably make a complete picture out of Europe, so we'll have to be able to look at the whole entire picture to be able to get something better. Even Spain has actually managed to hold over its trend line despite making some short-term reactions. So I think that the potential to recover is still there, so I don't think that Europe's out of the ball game. If they do a QE program, who knows, that might even incite things to be able to improve quite better into the short term as well. In terms of Asia, two of the solid movers also that we've seen is China. China exited its bear market in the middle of last year, and it did not look back. It stormed higher, climbing roughly from this low all the way to this high. And if you notice the RSI on a weekly graph, I've not seen an index do that in a very long time. In fact, I'm still trying to remember when the last time I saw something like that. And again, that would put an impact that there has to be some degree of wariness in here, because there's a stretch out that may have to be able to draw back a little bit. And I think just the other day we had a 7.7% reaction into the Shanghai index because the government decided to clamp down on errant margin lending businesses. And it's because of that that some choppiness is taking place into their market. Today, the Hang Seng Index, I believe, was up about 400 points, and so it was really still very, very strong. And this graph here on the right side shows that index, and you can clearly see an upward bias as well into that. So we do have very good, solid frames in Asia that I will believe that will also continue. This is Asia in a much broader perspective, so you can see quite a bit of it. Some of them are consolidating, some of them are recovering. Some of them are heading downward, so Asia is very split. So I think fund managers are going to have a very neat job of trying to be able to reallocate their money into very appropriate markets. And perhaps that might be a good thing, since the market is not very broad. That would mean that there will be more direction into fund flows. And if you show them that you're one of those countries that are showing better performance than the rest, then who knows, you might be able to entail some of that movement of funds rather than it being too broad in its scope. Also, when we look into currency markets, the US dollar, the euro, and just recently the Swiss franc, as you see there on the right side, although there's a lot of news articles that came out about it just a couple of days ago. But the US dollar is still very strong. And the recovery into that currency has made a monumental increase as well. And I guess that's also a good backing force into why the US economy has actually shown quite a degree of reparations. And not only that, but a very firm standing as well. It's the euro that's obviously under pressure, and of course with QE coming, that could extend the nature of that weakness into the euro, and that's why we probably have not really seen any major rallies as of yet, but we'll see, depending on perhaps on how big the QE program is delivered, then perhaps there could be some agitated movements. And just the other day, we saw the Swiss franc also drop down quite a tremendous amount. We have yet to be able to see what the impact of such appreciation in that particular currency may do to some particular companies and what effects might be. But so far, we have not really seen too heavy a ripple effect. So hopefully that perhaps it could be contained and perhaps not put too much impact into much of the global markets inside. But we will continue to watch that just in case something would happen. Now, I just want to stress that if you can just look at currencies alone, you can see how much that they've stretched out. There are overbought conditions in the dollar, oversold conditions in the euro. We also have an oversold condition now, overbought condition earlier that had fallen down into the Swiss franc. And these exaggerated points are going to have to fix themselves one way or another. And so if they do start to be able to correct, then that will add back into the volatility, and I'm sure other markets will be agitated when these adjustments are being made. Another thing that's also been very wide in its movements is the movement of copper prices. You probably are not been watching this too often. Next, side by side to oil prices there in the middle, which I think everybody knows by now has fallen like a rock. And that drastic decline, whether it's impacted because of the shortfall in terms of the outlook for demand in the global perspective, but clearly, I've not seen too much effort trying to be able to make any recovery there. However, on the right side, we do have gold prices, and gold prices have actually firmed up. And it's quite a little bit unusual because usually gold goes against what the dollar does. So if you notice earlier, we've seen the dollar becoming very strong, and now we're seeing gold starting to rally as well. So either that's telling us that perhaps the dollar might be a little pricey and may need some adjustments, or that could be very temporary and maybe head back into a consolidation. Again, we will observe it to be able to see it, but again, that's quite unusual to be occurring as of this particular stage. All right, so let's get into the heart of it and let's get back into the Philippines. So understanding all those macro pieces of information we looked at, how is that going to impact into the Philippines? The Philippine Stock Exchange Index continues to be resilient. In the last 3 months, like I said earlier, we've gone into a consolidation frame, as you see inside here, and we've worked into a box for a while, and we've recently pushed out of that particular box. So we effectively are back into an advance. And given that condition, we've broken out of the 7,413 resistance, and a very short-term estimate would target next resistance between 7,600 and 7,700. However, I think the trend conditions are still very viable, and looking down the road, perhaps somewhere closer into the next 6 months, I would think that the minimum-maximum range of what the index would be showing us would be a range between 7,600 and all the way up to about maybe 8,000 or 8,200, and talking about a 6-month period in terms of that capacity. So it does look quite prospective, and I think the opportunity to be able to look for this revaluation upwards is something we have to wait for, and so we need to be able to know when do we get into the market, and can it actually do that? Can it actually push much, much higher? Now, let's get back into looking at where we are into the Elliott wave cycle. Last time people have been asking me is, where are we in that grand roadmap? And normally, in a very bullish market, Elliott waves usually have a 1, 2, 3, 4, 5 wave count before the bull market ends. And I believe that we are shaping ourselves out of this fourth range. We're somewhere in this part or this leg of that, which could actually be the beginning of the fifth wave. And we just need a little bit more confirmation that we can stand above that previous high that we've had of 7413, and that should be very much an afterthought. And so if you were to look at the Philippine index chart that we have here on the right side, I've mapped out where I believe the corrective elements are. This is your wave 1, this is your wave 2, this is your wave 3, this is wave 4, as you see over here. And we're now seeing prices attempt to be able to climb back and test that high. And this is where we've had a little bit of a sideways movement in price. Now, the reason we can't just come out and just call out the wave 5 is because usually in a corrective waves usually come out and surface in 3 swings, just like what I've identified here, looking like an ABC. We've done the first, we've done the second. Could there be a third? It doesn't always have to happen that way, but there is a potential for that to back off a little bit. And that is the reason that we just have to be a little bit more careful and maybe not be extremely aggressive as of yet until we can see a bit more confirmation into that. But again, I'm very, very hopeful, because when I show you into the next slide, you will see why I'm a bit more optimistic. Last time, or in fact the last 2 times I've delivered an outlook to you, I've presented a model which I think that the Philippine index seems to be following. And what I've done is I picked off an historical sample of the PSEI index, and this has been the PSEI index back in between 2005 to 2006. And what it did is it built an area pattern. So if you see here, wave 1, 2, 3, 4, 5, turned around, went back up, consolidated near resistance, and then it attempted to break off that particular consolidation. And if you'd like to see what happened just recently into our particular index, I'll draw it here on the right side. And just have a look. This is our index today. This is what happened in 2005, 2006. And it's remarkably similar. And you've seen the corrective element here, just like this. How many waves did it have? 1, 2, 3, 4, 5 as well. Turned around, went all the way back up to the previous high, consolidated for a while, and now breaking above the previous high, which looks almost exactly the same. Perhaps the only difference I can tell you is instead of this going all the way down here, it was slightly stronger. But in all matters of chart analysis, you can see the similarity here is very, very striking. And would you like to see what happened last time? This is what happened. Yes, so this was the consolidation we were looking at. This was the little breakout, and this is what happened to the market. And that's why I'm rather optimistic that coming out of a consolidation, and after a very lengthy consolidation at that, after this, there could be an opportunity that we should be looking at. And that would mean that you'd have to be very much glued into watching where the opportunities are, look for those formations, make sure that you stick with many of the positions, don't be casting your positions out too early. And if you do taking some profit, I think it should be a bit light on the profit taking. Now, I also want to point out that after this swing, there was a very big counter swing. And this also contributes to my opinion why we're going to have a very choppy market this year. And I guess it could be possible because the other markets that we've looked at, currencies and commodities, might adjust. And it's because of that that we could see some whip back in the market. So I know it's going to be a little bit testy, but if you look what happened thereafter, that even came out to be quite even more striking. So I think that leads us to expect something from the market that I think is very unusual. And very typical of a wave 5, we should see an increase in momentum in terms of its swing. So that's why we remain to be quite hopeful that these kinds of movements can still be available for us. Now, let's have a look at the Philippine peso. The peso against the dollar has actually proven to be quite resilient. We've noticed that the dollar has gone up tremendously. And as the dollar attempted to be able to revalue upwards, all our particular currency was able to do was only attempt to go back up here. It stood right below 45.10 and couldn't punch above that particular resistance point. So I think that it's a very, very strong reading into our peso. In fact, just recently, before I've come here, I've noticed that the peso rate was trading on the lower end of this band already. And so it's actually quite strong compared to even the dollar maintaining its strength. So if we are stronger than a dollar that's actually appreciating, that means that you're actually doing quite well. And so this, like I would believe, would be a testament that the economic stream is quite clear because your currency will speak for it, and thus keeping it very, very sharp into that ability to stay below that 45.10 was actually very key. So I would be in the camp of attempting to sell the dollar closer to the 45.10 rate and attempting to buy the peso closer to the next levels of support as well, or simply hold your peso holdings. Then driving into the different sectors into the Philippines, we do have much better performance into the commercials and holdings sub-indices. I've drawn them all out here, and I would say that the weakest of them all seems to be on the mining side, but despite it being the weak, it was not as weak as when I looked at it last time I spoke to you. That type of maneuvering is also quite steady, and I think there might be some sporadic activity into the mining sector, but I would be more focused where the money flows are actually going. So based on this, I would stick in either in the first two, maybe even the next two after that, the property and financials being the next objectives in terms of our trading windows. So what I would be doing right now is I'd be focusing on stocks that are outperforming, looking for trends that are unusually strong, and waiting for the opportunity to jump into these particular counters. I don't usually look for the weakest stock on the board because that's not a good way to look for money flow. In fact, it's the outflows that's actually attempting to be able to keep it down pressed. So stay with strength and look for the opportunities to be able to buy it as soon as these particular strong counters attempt to make reactions. Now, part of what you'd want to do as a strategy for those who use technical analysis is to be able to use 3 moving averages to help you. If you are short-term in orientation, then you look at your 16 or 32-day pullbacks into that particular index are the opportunity you're looking for. If you're a little bit more in the medium term, then you can wait for pullbacks into the 65-day moving average. If I see prices going below that, I probably wouldn't be looking at it for the meantime, and I'd probably be concentrating my view on issues that are a bit more strong. And hopefully, along with that reading, you want MACDs to be in your favor. So buy readings that are positive are MACD structures you want to have. Now, like I said, be prepared for volatility. I think today you came out with an announcement. IMF comes out with a good reading in the Philippines. People get a bit overexcited. They take the market very much higher, goes up quite a bit. Before you know it, your index is only up 20 points at the end of the day. Well, that just goes to show you that the market's a bit tired, right? We've gone through quite a bit. This is about the 3.5 weeks of an advance from the low of the index, and the index needs to wind up. And despite us going through a consolidation phase, in the shorter term, there might be a need for the market to be able to draw down. So be expectant of these volatility emotions and prepare yourself for the buying opportunity that these things will bring out. In terms of volume, there are issues out there, particularly in the mid to small cap, that sometimes dry up in volatile periods. So be very conscious of the stock that you're buying and make sure that volume levels are in your favor. If you think that you are 10% of that particular market, that's not an issue that might be too solid for you to look at. So you want to be very small compared to the market so you can go in and out whenever you want to. And lastly, when you're taking profits into your movements, I would suggest maybe break your positions down into maybe a half or a third and only sell maybe the half or the 1/3 whenever you're profit taking. Because the hardest thing to do is the market would come down, you're selling all your position, whips back up right away, and you're not able to jump back into your position. All right, so try to be a little bit more stretch into your perspective. We did, after all, tell you that markets could be much more solid. And so with that in mind, you'd want to be keeping yourself into the market that has that potential in view. Now, in that condition, that markets attempt to pull back and then attempt to rush after that, and assuming that little example I showed you in history may to manifest again, there might be a need for you in the short term to be a bit more aggressive and to run after certain issues that are running into momentum movements. And if we do see this, you might want to be able to be more aggressive in your cast. Instead of prices pulling back to your 1632 or 65, they probably will not do that. They'll probably only maybe go back to an 8 or 16 day. So you want to be a bit more aggressive in being able to buy into these particular issues. And like I said, the run might be short-term in nature, but there might be a correction afterwards, so just be a bit more nimble in your ability to do that. But again, please don't just sell all your positions. I would suggest that you'd hold them all to them. And during aggressive markets, you also want to be able to not focus too much on the RSI at 70%, because RSI at 70% normally overbought at that levels. In an aggressive market, that could easily go to 80, 85, or 90. And so that's why you might have to be able to push your thresholds a little higher so that it doesn't attempt to contain you from moving into an issue that still has quite a bit of a blast to be able to move on to. Now, just to give you a suggestion and perhaps a sample of how you'd be orienting your buys, particularly into your reaction. We did have a good window actually earlier with DNL, because DNL made quite a bit of a reaction. And it made its first reaction, rebounded, made a lower high, and then it pitched down, went all the way back to your 65-day moving average, and then jumped up right away. So these are the opportunities that you want to be waiting for. So if you are there waiting for that moving average, and you see confirmation that prices are rebounding off the moving average, then that's the time that you have to move in. Then simply put your a protractive stop underneath your major support point to protect your particular position. Now, if the price of your stock withdraws back to the 65-day, don't expect this to go back into a new high immediately. Normally, what usually happens is that after a rebound, it will wind up first and then try to be able to reorder its strength. And you can see over here that MACD structures are not cooperating too well yet. So that only contributes to the fact that I think this will be more choppy rather than it just being explosive into the advance. So I think there may be an opportunity to buy again when this attempts to be able to make a bit more of a reaction. But this is the kind of maneuvering that we want. Another particular kind of trade you want to have is you might see issues that are only going back to their 16 or 32-day, winding up, then breaking out from consolidation patterns. Again, that's another momentum gush that you want to take advantage of. So if you see formations like that, then learn how to capitalize by entering during these breaches of resistance. But it's important that any break of resistance has to have some sort of winding nature before it breaks out. Don't just buy anything that goes off the previous high, because not every resistance break is a breakout. For those of you who have attended my technical analysis classes, I have explained that on numerous occasions. So if some of you would want to learn more about that, I'll welcome you to come back to my seminar, and I'll be more glad to be able to reorient you in the ways of how to better do that. Now, just as a snapshot, I'd like to be able to recover what April showed you earlier. These are the companies that she had as her top picks. And I decided to make a grid for you so that you can also have a look at, these are the same issues she's covered. And I've also indicated the support areas so that you can see where the next good buy points may be into the short term and perhaps medium term if you're looking at the second support. Now, I'm a bit worried if I see that second support levels break. So I would be quite confident that some of these things should be able to hold out there and should be good in preparing you for the next buy window. Now, the only thing that I've seen a little bit more maybe not so good about this issue is some of them have actually gone below the 32-day moving average already. Those that you see in red over here have done that. And that means that they're probably just consolidating into the short term. So there's no need to be too aggressive into those issues as of the meantime. But I do like practically all of those issues that you have there. And since April already covered them, then I will just leave them there for you to be able to move into on the proper pullbacks into support. And I will show you a few more issues that I've also included as they have shown quite good technical promise as well. So let's begin. I'll show you 12 companies that there, but prices seem to be holding quite well. And part of the structure that you see, there's very clearly very much into an uptrend still. So I have no real issue about the placement coming out. Although, yes, it might cause some volatility inside. Maybe that could have been the next opportunity. And if we do see another one in another issue, drop back to support, I mean, that should be taken as another opportunity. So the structure here is still quite good. I've indicated resistance between 35.60 all the way up to about maybe 36.77 or 37 as your next short-term targets. So I hope that this can serve as a trading guide for you to be able to draw out where your next profit-taking levels will be and where your buyback points will be as support is indicated here. The next one we have on the right side is Banco de Oro. I particularly like the consolidation pattern that has built. It had gone up a bit too strongly earlier on, but it's wound up quite well, and that kind of wind up is exactly what we need. So after prices attempt to be able to wind up, it seems to be better conditioned to be able to move on, and part of the structure that you want to see here is a continuing factor, and since no uptrend has been broken in BDO, I think that's still a very good issue to be able to pick up, particularly when we see prices react towards support. I have support between 108.35 to about 105. Another issue that also seemed to be very good in its technical standing was Century Pacific. It's actually created a rounding pattern over here. It's recently broken throughout, and in the last 3 days, we've seen prices make a correction. So that seems to be a good opening point to be able to generate a new buy point. These kinds of formations are usually very strong. This tells you that there was an accumulative interest, and now that prices have broken through this particular threshold, that tells you the intensity of the buyer seems to be getting a bit more intense. So again, that's another issue I'd be looking at, closer to 1670 to 1650. With regards to Jollibee, I know Jollibee has been very expensive in our fundamental guide for years now, and it just doesn't seem to want to stop climbing. And given that particular track record, I follow the trend quite earnestly. And based on the structure that we have, again, let's wait for prices to either make a reaction either through here or to here. And that would be in a buy range closer to 208 or even 205. Then we have JG Summit and MegaWorld. JG Summit has also moved into an upward channel. It's also a very, very strong company. However, it's trading on the high band of the range as of the moment. So again, I would rather that prices make a bit of a withdrawal from that particular price zone. I'm looking closer at 68.30 to about 65.90 as the next major areas of support. If you do have it, it doesn't mean that you should get alarmed, because I think the pullback is not going to be too much, aside from those support areas that I've looked at. So I think you should just wait for the next buying opportunity for that one. But MACDs also look quite tender. Just wait for a pullback for a JG Summit, but that is one to be able to hold into your portfolio. MegaWorld Properties also looks to be quite nice. I mean, the area pattern that we drew up there was a very big consolidation box, and it's recently released itself from that. Again, a pullback coming closer to the short-term average is what we want. So I've put support closer to about 520. The next one would be about 503. Then we have Meralco. I know a lot of people haven't been too bullish on this particular stock recently. The accumulation pattern I'm seeing is quite nice. The triple base that it's managed to be able to make from here, here, and here, only to just recently come off this particular consolidation range makes things more attractive technically. And hopefully we have one more threshold to cross, so I think it might have some problems here for the meantime because you're at the previous high. But if it can free itself above that, it should be well its way to going closer to about maybe 281 or 292 into the short term. And another issue that also recently broke out was Manila Water. And of course, we've managed to see the potential for Manila Water because of what happened to Maynilad, and it's because of that it's broken through a very lengthy consolidation band as well. Now prices are a little bit pricey in terms of where it's come because of the stretch outs. It's overbought. You want to wait again for prices to be able to draw down and try to be able to narrow the spread between itself and this moving averages that you see there. So maybe just be a bit patient, wait for prices to pull back a little bit before looking at that. That new support's about between 32 and 31.26. Then we have SM Investments and SSI. SM, if you've noticed here, also managed to be able to break out from a very beautiful pattern. Also a very wide consolidation, and that right away impacted in a very sharp advance. In fact, if you were to measure this, it's practically hit its target price already on a very first swing. So again, you might want to wait for prices to be able to pull back in an effort to be able to bring down your risk reward, so to speak. I'm looking at support closer to 863 to 832. Hopefully the first one should be able to be suffice to hold prices. SSI also, a recent IPO that had come out, although we don't really have too much technical data yet. There is some slowdown taking place, and that's why it's going back into the area over here, but it's been quite abrupt in its advance, so I think it should be quite meaningful that these reactions are taking place. As you can see, the RSI was a bit overbought as well, and we need some of that to narrow. So again, wait for prices to be able to pull back. I have my support at 10.50 to about 10 pesos. And finally, the last two, we have Universal Robina Corporation. Again, also very strongly into an upward trend, also building a consolidation. It might need to be able to wind up a little bit more because I don't see too strong momentum as of yet, but it is not overbought. So that means that perhaps you want to buy this gradually already. You could actually begin, and hopefully if we get a pullback closer to the next level of support, better. That would be between 194.50 and 189. And the last one that I'm looking at is Zerpass. Again, I don't have too much technical information. In fact, if you notice that my MACD and RSIs are not being drawn out yet, but usually given that trend pace, I think the stock is quite overbought. So again, you want to wait for prices to be able to withdraw a little bit. And if you do have it, you can, I would say, just hold out and just wait for an opportunity to be able to add into the next reaction. I think, by the way, it's been moving. You will see another reaction, and you still have a higher low be implemented. So I think that would be another good entry point for people who have not been able to look into it yet. All right, so there you have the 12 issues, and perhaps we can work off their summary. Corrective reset just to be able to flush out whatever selling that you have before gunning for the next move. Europe, I think, will have mixed movements as well, but we will see into the next few days whether a QE program is launched and whether we can see Europe attempt to advance. If something comes inside that allows Europe to move up and the US to be able to move up again, I think that should be quite buoyant for the rest of the world. So I think that is an opportunity to keep an eye on. The stretch in currencies will create some volatility as well, and we've seen that the disparity from where prices have been in the last 3 months to where prices are now are quite exorbitant. I think there could be room for some adjustments into that, so I would anticipate volatility to be driven by the currency market and then reverberate to the rest of the other investment products. Finally, Asia. Asia looks very mixed to me. There are some parts of Asia that are being adversely affected by lower oil prices and lower commodities, and that's the reason why some of the markets that you observed earlier are very different from some of the others. The Philippines, for example, being one of the stronger ones because we were one of those to be able to benefit from an extremely lower oil price situation. So I wouldn't expect Asia to be moving together right now, but I hope that we'll see more money flows move into much stronger markets, and that should be able to allow us to be able to linger on. And the Philippine condition has not changed. The upward bias is very much in place. We've just punched off a 3-month consolidation, so that should be able to help set the ground forward for more advances. But since we've gone from 6,900 to 7,500 in a bat of an eye, we need some wind-up to be able to be regenerated to allow prices to have some lift. So don't be too shocked if you do see some volatility come back into the Philippine index. Again, look for the opportunities to buy whenever you see prices attempt to move towards support. I'd be a bit more comfortable with the index closer to 7,320 to about 7,300, and hopefully that healthy correction should be able to provide some opportunities for many of you. And finally, after we get that pullback in price, I mean, you have to be able to keep your sights on because it's very important that once you get back on board, and just in case we do see a momentum rush here, that you have to learn how to hold your position. And so it's the reason that despite the volatility that we had looked at into the market, that we've entitled our report to stay, the course, because that statement simply means that you want to keep yourself situated, you know what your goal is, you want to be able to make sure that you move into the market when prices make that reaction. Don't get too jittery when prices show volatility. If you're mentally prepared to do something, and I think you will create more opportunities rather than be a bit more destructive into your trading conditions. So there you have it. This is our opportunity that we think is going to still be in view for at least for the first half of the year. And hopefully that we can see some adjustments to be able to bring out some new trading windows for the Philippine exchange. So I leave you again, and hopefully that when we speak again next time that we've seen our index closer to April's targets, and hopefully that you can come around to be able to keep yourself focused on many of the issues that we've much discussed today. So with that, thank you again very much, and I hope to be able to see you in some of the other seminars that we're going to be coming up with. And please stay around because we are going to be announcing certain things about the new product feature that we're going to be having. So again, thank you very much. Nice to see you all again.